Hi, I'm Mikey, and this is Tyler. I'm with the founders of Innovative Start Organization, a financial literacy nonprofit. We're here to educate you on all things financial and economic. Obviously, we're here to inform, not persuade, and we have just a couple topics to talk about, just about some current things going on. So, one, I know it's been a minute. We'll have a lot of updates as far as like some of the things that have been going on financially, whether that's I guess, the new Fed chair, some of the expected from their interest rates. We'll also talk about some of the other things that are like invisible to consumers, but also very strongly needed to be discussed. So we'll pop into our first topic, which we're just talking about federal interest rates. We've had a lot of videos where we've talked about this. Obviously, this is an ongoing topic. I feel like it's always good to just keep up to date, always know how it's going to impact you. What is the long term outlook? How's the short term impact you now? But yeah, so as of May 2026, the Federal Reserve and global markets are have effectively raised expectations for any interest rates to rise or any interest rates to cut this year. So essentially, what that looks like is if you've been paying attention to the Fed interest rates and you've been paying to the no longer current chair, but they've been steady basically for a while. There's been no major cuts. I think there was like a small one, but it's been basically in the same range within like I forgot how the basis points goes, but within a 0.25 if we're talking about like interest rates. Uh, but essentially, they're staying around 3 percentage. Um, the Fed is holding those interest rates firm just because it's like there's a lot of things economic wise that haven't shown any signs to go either way for there to be any raises or cuts. Again, whenever there is a cut or a raise that also has a significant impact on certain things that rely on the federal interest rates, that can be loans, credit cards, anything that just there's any type of interest charge to it. You can think of it from that way. Also, savings accounts. There's a lot of things that also have inverse reactions. It's like the bond market, things like that. So things to pay attention. I feel like a lot of people don't even look at the bond market or are interested. I think that's more of like a older thing, but it's also a good thing to take a look at and understand. What that means as far as like rates, I think the government, or I guess the current administration, would like some cuts. We will see how that looks with the new chair. If you guys are not aware, I think what was it this week he got approved, Tyler, the new chair.
I think so, yeah, it passed on Wednesday, right?
Yeah. So we'll see how the new chair is. Obviously, they're supposed to be independent of any party or whatever. And again, if you didn't know, and this is the 100th time we're probably going to say it, the Federal Reserve is supposed to be separate from the government. So there's not supposed to be any political influence at all, even though the chair is presidentially appointed. Am I right about that? I'm pretty sure that's how it is. It's
Yeah, yep.
who
Yeah,
knows?
you're
Go look at the history of the Federal Reserve. I'm sure Tyler will give you a long spiel about it too. We've talked about it a couple times, but it is an interesting setup. Let's just say that. So, yeah. So what that looks like though is that since they're going to stay steady, your high yield savings accounts and things like that will probably still stay around that 3 to 5% rate. If you find anywhere with 5%, let me know. Put the comments where you're getting that at. But yes, and then other things as far as like credit cards, loans, and things like that will probably also stay at I'm pretty sure they're at lower interest rates right now if you have decent credit. So things to take a look at, but just pay attention because say, right, there's cuts or there's a rise or whatever that looks like in those interest rates. That can determine the way that you go about buying stuff or getting a house or getting a car. Because if you buy when interest rates are a little bit higher, us is going to be more paying on your side. But yeah, any thoughts and opinions on that, Tyler?
Yeah, there's a few thoughts on my end. One, the high yield savings account you mentioned, be careful. I'd recommend you all do your research on like which company has the best track record for having a high yield savings account because sometimes they'll do like a very high yield for the first like 3 months and then they'll
Mm,
drop it pretty low. So just do some research there. Um, Yeah, the federal interest rate is interesting because in oil increasing quite a bit. I mean, I think that that may keep these rates pretty high because with oil increasing in price, it'll increase inflation. When inflation increases, they'll keep interest rates high. And then the Federal Reserve pick, from my understanding, the president appoints the nominates the pick, and then that individual has to go through questioning and hearings with both the Senate and Congress. So, and then I believe they're sworn in for, gosh, this is terrible. I should know this. I think it's like 4 or 6 years.
Something like that.
Um,
It's a lengthy term for the importance of the position. That's all I can remember. It's a decent length, but I feel like Jerome has been, at least for a major part of my life, has been the Fed chair. So
mhm.
uh, yeah, it can go a great deal or like length in that sense. So uh,
Let's see.
also on top of that, speaking about Jerome, he is not completely out of the game. I think he's a board member or something like that now. So um, he will still have a certain amount of influence, I guess. Uh, I don't know how much goes in the background of things within the Federal Reserve, but um, I'm sure they try to come up with a mutual discussion or decision whenever they make those things happen. But yeah,
Says an unlimited amount of terms, but it's every 40, the terms are 4 years.
okay.
So that's interesting. And I think like the current administration wanted Powell to obviously like decrease rates in a more timely manner
Hmm.
and more frequent. And he obviously didn't. And so I think that's why they're frustrated. I don't know.
Yeah,
It isn't.
it was interesting because if you guys are not aware, and as we kind of wrap up on that piece, um, they were looking to take him to court for like I forgot what it was, but they dropped the charges because they were going to push the new chair, and all of those like proceedings and everything else was just going to prolong them getting the new Fed chairperson in. So they said, you know what, you can have it. We'll just get our new guy in, and they're going to hope to have some type of influence on him. Again, it's not supposed to be that way, and let's hope that it's not that way. But go and look into the start of the Federal Reserve, the history behind it. I'm sure there's a lot of conspiracies behind it too as well. But it's just like it's interesting. I say that. So again, a lot of people that probably pay attention to all of that will probably say like, it was Jerome's time to go. Only time will tell. Who knows how the economy is? They don't. Their decisions are based on trying to sustain the economy and not let it break. So yes, they have significant influence on what happens after they assign those rates, but at the same time, the reaction or whatever else that happens from the economy, they don't have like a strong control over, right? Because they can lower or cut interest rates, and something else happens or something goes out. So it's better to say like, hey, we're going to stick with this, keep seeing how it plays out because we're looking for the long term, not the short term. And I think the current administration is looking short term essentially. So, but yeah, those are just some pieces there without trying to get too much into the weeds. Jumping into our next topic, this one goes over just some financial pieces that I think people, like I said, are probably not extremely paying attention to. But talking about fixed cost, right? These are things that don't change month over month, things that you have to pay a need or anything like that, but not necessarily, food, water, shelter type things, but like, you have a car, your insurance, you have an apartment or a house, you have your renter's insurance or whatever that looks like. So this is where you want to pay attention to because premiums on those sides are rising, especially like health insurance, all those things that, like I said, are needs as far as like they're a necessity out of another created, I guess, need. But as of May 2026, surveys have shown a massive structural shift in consumer anxiety. Now, essentially, one third of Americans, they simply are just keeping up with rising costs. So if you've ever talked to anybody or like had some conversations or maybe you've seen on the news or wherever you get your information from, but I think they call it like a K economy. I don't know if you've heard that term, Tyler, but it's essentially where costs keep going up, but income or anything else does not relate. There's other like people also say like stuff like stagflation, things like that. But if you were to get like a picture of it, it's literally just like that. You got your costs keep going up, and then you have that kind of inverse from there. So um, the prices of everything that keep going up, especially for these necessities or these needs or these things that they've created needs out of. Like, right, if you have a car, you need insurance. If you, pay for your apartment in your house, you need, renter's insurance. But things like that, right? Those costs keep going up, whether your premiums, whenever you're renewing them or, you shopped around, but your rates keep going up. But at the same time, people's income, levels are not also rising with this influx of that as well. So here we have that, like, here I'll give you like an example. I say, if you're budgeting, right? Say, month over month, you have your food budget, right, which is also kind of impacted and is shaped in that K economy as well. Your gas budget, um, things like homeowners insurance, renters insurance, medical insurance, dental, all anything from that aspect. Like I said, anything that's a need created from something that that you use, right? Again, those prices keep going up. So how do you continuously budget for something that continues to change, right? It almost seems like it's becoming a variable cost that is also somehow fixed at the same time. So yeah, I think in reality, right, it's going to get harder until until there's a way to who knows how to get these things like kind of regulated essentially. Um, I don't know how true it is or if they really cut the check yet, but I've been seeing a lot of news around refunds to the businesses that kind of lost out on those tariffs. So we'll see if that shapes anything of how they do, if they just keep that money and, keep prices the same. But there's a lot that plays into that, right? There's a lot of big companies that lost a lot of money because of that, but then they're somehow getting, some type of refund. But at the same time, it was more consumer impacted, not business impacted. But there's a lot of gripe behind that. I'm sure you guys have seen your stories, but what are your thoughts on that, Tyler?
Yeah, it's gonna be interesting with if these refunds go, and like the current administration did threaten that that they will like track whoever takes the refunds. Did you see that?
I didn't see that
So like
either, but that doesn't surprise me.
that's so I don't know. It's interesting. Yeah, I think I don't think some of these businesses are going to decrease their cost when they've already, or like decrease their prices when they've already raised them. So it's just unfortunate. And like you mentioned earlier, the graph you were describing, like income is not increasing as quickly as the cost of our goods are. So this is where we get strategic in spending money. And it's, um, yes, the situation is terrible. We're all feeling it. So it's like, how do we react?
Mhm.
Um, So like one thing that at least my house did last week was we did a freezer. Uh, I'm sorry, it was this week actually. We did a freezer dinners. So like essentially the thought is whatever's in the freezer, so we don't have to go spend more money. Like let's just go through it, so we don't have to spend a lot of money on groceries for the week. Or like, hey, there's stuff in the pantry that we could eat. Like yeah, it may not be what we want to, but like we have food,
Mhm.
and so the way to save money, that's what we did. Some people will do like the no spend whatever month or no spend weeks. So essentially, the whole goal is like not spending on any additional things besides like
Mm,
groceries and gas and things like that. Um, so just some ways that we can fight this. And yes, it's annoying, but like doing these consistently to save money over 6 months, a year, 2 years, they add up. And then when you look back, you can really start to see a dent in some things. So I think a lot of people like it's so unnecessary. They don't want to do it. And like, drastic times call for drastic measures. And it's one way we can react in a positive way. I encourage everyone. So with these rising costs, and even like I think you mentioned this, but like insurance premiums, always shop around. Like, um, is it you know this is individualistic, but like for me, I don't have dental insurance because I've never really needed it. My teeth are fine, and the cost to just get my teeth cleaned are cheaper than the actual insurance. Now that's different from maybe someone that has kids or
mhm,
like maybe someone that has a history of mouth problems and they need the insurance. Do what you have to do. But there's just some ideas or like yeah, just maybe you have a gas guzzler car. Don't drive that for a week. Maybe you drive your partner's car or something. To go wherever you need to go. You go together.
yeah.
There's some small acts. Anyway, that got me off on a tangent, but that's a way to I think we can combat these.
Yeah, and I think the moral of what you're trying to hit on is convenience causes extra cost when you really think about it. So maybe some unconventional ways of saving, you know, it gets you out your comfort zone of, okay, this is more convenient for me. So like, because a lot of like, and especially in the world we live in now, where everything's everything's accessible. So you can DoorDash food and it's at your door and all that stuff like that. Like, it's created a lazier mindset to where like everything needs to be instant. You need it right now. You get it conveniently. You don't have to be disturbed. Essentially, you're in your comfort for it. But that causes other trickle down stuff of you're paying extra. Oh, do an audit on how much you spent on DoorDash for the month. Do an audit on how much you spent on gas. Like if you're somebody who has multiple cars, like Tyler was saying, right? One of them gas guzzler or whatever. Say you and your partner or roommate or whatever, you guys don't go into the office at the same time, or you guys can like coordinate where you can save that, carpool. That works, right? And I think a lot of people are like, well, yeah, it's easy to say that and stuff like that, but take the first step to do it and it'll be a lot easier, right? It's a difference between say for an example, right? Two people driving, they're both filling up their tanks because they're both doing that, right? That's literally 50, $100, right? Between the both of them, what can it just be one tank of gas? So, and you can switch on and off because you can be like, well, I don't want to put this many miles on my car, but you can switch on and off. So it's balanced. But to each their own, figure out a way to, you know, find out where these influx of costs are from you just trying to create more convenient measures, right? Because if these convenient measures are not saving you money, then you need to figure out a way to cut back on it slowly or however that looks like for you so that you can create extra funds, rainy day funds, savings, invest something in that sense. It's extremely important. I will also say this too, any bonus that you get, so say like for your work or anything like that, it needs to be higher than inflation, right? If it's on par with inflation, that's fine, right? Say you're at work, they're giving you a 3 to 4% bump, right? That's on par with inflation, right? For the year. So um, that needs to be happening every single year, essentially. But we already know the case in a K economy that that's not happening. Wages and income is staying flat or essentially decreasing in relation to the cost of goods and inflation in general. So pay attention to that. If you're wondering, like, wow, I feel like things are more expensive, or wow, I feel like my dollar's not purchasing the same amount that it used to 2, 3 years ago, right? There's literally calculators online where you can put, 5 years ago, how much, a certain salary or how much something cost or whatever, and you'd be shocked that it was only, not long ago. So, um, but yeah, hopping into our next topic, which has also been a trending thing, is the job market and AI. Right now, they've been kind of hand in hand for the certain things that have been, I guess, fighting a uphill battle, essentially. So, the stock market has been all in with the AI stuff. There was a company that just IPO'd yesterday that had like some type of AI aspect, but I'm pretty sure they IPO'd $200 to $300 more than they expected, which good on that company, and we're pretty sure the CEO or CFO or whoever the stakeholders are extremely happy. Um, but at the same time, right? The better that these systems and all these things get and all that, right? People start to think about job security. And what's really important too is like, somebody's like, what can I do to fight this? Or, what does it look like? How do I make sure that I am the best person in my position or the best person to elevate myself in any case or any point of time? You really just have to see how the market is moving. On top of that is how is your business or the place that you work for, what are they doing? It's always good to stay on top of that. I know a lot of people, they just work, they do their job and whatever else. It is not, we're not necessarily saying you need to be invested in everything that your work does, but essentially you need to know what's going on around you, right? If you're blind to your surroundings and, somehow you get laid off or, something happens unexpected, right? It's because you weren't paying attention in a sense. Like a lot of people that say, like, I just never saw this coming or whatever else. But if you're looking at the market, you're paying attention to the trends around, your job or whatever else, like, right, you're seeing certain people get laid off within, your job or something like you have to pay attention to those things. Figure out what's going on. And also stay ahead of the game too. Um, I think a lot of people are like, enhancing their skills, knowing how to use AI. I think a lot of jobs are starting to encourage it now versus where it was kind of like determined if you did use it or you didn't. I think it's going to be a question in most interviews now is, do you know how to use AI? Are you, used to prompting? What kind of tools have you used? What are you familiar with? But these are skills that you should always be enhancing. Um, I don't think there's going to be any time unless there's huge regulation on artificial intelligence anytime soon. So better just kind of get with the program in a sense, for lack of better words. Um, some of the biggest things too that you can see, and I think there's going to be an influx of people to do so until they probably also automate that, is data centers. I know as a economic in certain communities, there's a heavy push against data centers, but if they do get pushed, obviously we live in a capitalistic country, so if they do and when they do get pushed, that's a huge sector that'll probably blow up as far as like an influx of available jobs. So if you're somebody who's like, I'm looking for a way to pivot or I can enhance on something to look into because I'm pretty sure they're probably hiring at those ends as well. Um, but yeah, I also take a look at into it. I think I've seen some videos of people in data centers. It's a lot of networks. But yeah, I would also take a little glimpse into it before you dive into something like that. But what that kind of means though is obviously whenever there's a new technological advancement, so you go back 100 years ago, you have the industrial revolution and things like that. I think one of the biggest markers that people don't really think of or realize is that um, we have created jobs to help negate technological advancements, right? Before, if you really look at society, a lot of people worked in certain sectors and things like that before the Industrial Revolution because those were places where there were needs and help that was needed there in those like sectors, right? Then you have machines that make things easier where you get rid of a job here and there, whatever, right? So instead of having a mass unemployment or, just a lot of people just not able to work because all these places don't do anything, you create other jobs to exist, right? And then you create other jobs off of that. So think a lot of corporate jobs right now exist off of kind of that trailing notion. But I would say one of the biggest things too is if you are in school right now and you're getting ready to graduate, right, and you've already looked into the job market, whether you have something lined up or not, just stay ahead of the game, do your research, look at the company. Are they using AI? What does that look like? Do research. Research is the biggest thing you can do, and will help you out your life out a lot, especially for your career. So, and also keep investing in yourself always, whether that's like monetarily or skills or education. It's just extremely important. But yeah, I'll pass it over to you as far as your thoughts on the AI market boom.
I think you hit on everything. The only thing I have to add is if you are any inclination of going to trade school, like I highly recommend just going that route. It's it's unfortunate, but our society, at least in the United States, has kind of looked down upon trade school, but now that's coming back to bite them pretty hard because all the white collar jobs, for lack of better words, are the ones that are getting laid off, and the blue collar jobs are not. So yeah, if there's any, if there's anyone that's a high school senior or even in college, 1 or 2 years in, whatever, and you can pivot out, there's a, at least in Georgia, they have like this thing called it's called Hope Scholarship. They'll take care of your trade school. It's only 2 years. I know people that come out of trade school making 50, 60, $70,000 a year starting out, and they'd only be 20 years old doing it. So I think that's a huge thing. All these data centers, they need what's it called? People to lay down all the wiring, the electrical. So that's my 2 cents.
Hmm. So, and I think, like I said, the biggest thing you can do for yourself right now, as I said, is to pay attention. Really, you see something, research it. Just stay focused and don't be too blind to your surroundings because you can easily get left behind, right? Um, the people that continue to excel are the people who continue to invest in themselves and to keep going, right? Instead of just doing something just to do it, right? Because that's if you're in a job or a place like that, like, that's the case, but that's also your livelihood. Because if you don't have that, you cannot sustain any other type of living that you want or, want to be at. So, yeah, I would say all in all, just if you're worried about yourself and whatever else are your responsibilities and things like that or whatever you want to do in life or where you want to be in the future, continue to invest in yourself today so that you can be at that point tomorrow and or years to come. But those are our topics that we had today. Again, we hit on a couple things. I think a lot of times, when we hit on these points, we want to make sure we emphasize on to do your research. There's a lot of like, fun stuff that you can dive into that also help you really, really, really understand one, the conversational pieces that we have, and then two, just the things that you see in your surroundings and the things that you go about in everyday life. So stay focused on that piece, stay focused on yourself, look at everything. Like I said, don't be blind to whatever it is, the noise or the noise that you're also just disregarding, but just have an open ear and do the research yourself, as we always say. So again, we're always here to inform, not persuade. We'll get the notes out there, and then it's just up to you to do your due diligence to, get to a point of understanding to where you get it or you don't. But yeah, so we appreciate you guys. Don't forget to like, comment, and subscribe. Check us out on all our platforms, which are always linked on our channel. And we'll catch you all next time. Thanks, guys.